Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at Corsair. They just posted earnings, so I wanted to give you my thoughts on that. I also wanted to go over some of the other video game stocks like Turtle Beach and Sony, kind of give you an idea of where I see them going for the rest of the year. I do own all three, and I think they're going to do very well. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the top pinned comment to my Patreon account. Come over and join the family. We've got an awesome community over there. We do still have a few spots down on that $10 tier, so if it's something you're interested in checking out, definitely take advantage of it before they're all gone. The price is going up after that. And it will stay like that. There's not going to be any more increases for a period of time, but that's kind of where I think it needs to be. There's just way too much value in there. You'll get access to the private Discord where we talk stocks. You'll get links to the portfolio anytime I buy or sell a stock. But more importantly, all of the swing trade setups. That way you can not only, take really good trades. We've had a lot of trades hitting a lot of targets, but you can also learn to start identifying those, know and learn what we look for. And then we've also got a lot of education that you can use to become a much better investor. So if you want to join a community of a bunch of awesome people, really truly becoming some elite swing traders, definitely come check it out. I know you'll get a lot of value out of it. Day One Squad, I love you guys. Thank you for your support. Guys, real quick, there also is my Instagram and Twitter link down in the description below. Real quick, I actually had the wrong Instagram account in there the last couple of videos. So for any of you guys that did follow my personal Instagram account, make sure you go and follow the, the channel's Instagram account, because that's where I'm actually going to be posting all of the charts and alerts and updates and things like that, where I can post much more frequently than I do on here. Obviously, making a video versus just posting or sending the story out is much easier. So definitely go follow those. Like I said, I will put the links down in the description so you can go check that out. I would really appreciate that if you would follow me on the Instagram and Twitter. So thank you guys for that. Let's jump in. Today, I want to talk about Corsair. For those of you guys that are new to the channel, Corsair is definitely one of my favorite stocks for the long term. It's not one that I swing trade or have swing traded lately. It is one that I dollar cost average into. I buy it, no matter the price, if it's up or if it's down, on a weekly basis. I love video game stocks. Online gaming and video game stocks are definitely one of my favorite industries to invest into. I own Sony, I own Turtle Beach, and I own Corsair in my dollar cost average portfolio. And I think that they're all going to do very well. So in this video, I wanted to go over the earnings report from Corsair, kind of give you my thoughts on it and where I see the stock going for the remainder of the year. I also wanted to kind of go over the Turtle Beach and the Sony chart and kind of give you my thoughts on those as well. The main reason why I'm putting a lot of focus on Corsair in this video is because it is my favorite out of the three. They just posted earnings, but the stock has been underperforming for months now. It has not been going in the right direction. It's been, trading to the downside. So I wanted to take a look at that, give you a little bit more deep analysis on where I see it going, if it's still a buy, if I think it's something that we can still make money on, or if we should kind of jump ship. I also wanted to kind of give you my Corsair stock price prediction for the end of 2021. So let's get started. First thing we're going to look at, guys, this is just the earnings report. They did put out an entire investor presentation where you can see like all the different revenues by segment. You can look at the new products. You can do all of that. I will link that in the description as well, so you can check that out. Today, we're just going to look at this, though, so the video isn't a 30-minute video. I'm trying to make them a little bit shorter than normal because I do get really long-winded. As you guys can see here, Corsair Gaming EPS misses by 8 cents, but the revenue is in line, and then they updated on full-year guidance. Real quick, non-GAAP EPS, they posted 16 cents, which was actually a miss by 8 cents. But then on the GAAP EPS, they posted 2 cents, which was a miss by 14 cents. So guys, they did miss on their EPS. Obviously not what we want to see. We do want to see them beat expectations, but there's a couple of things that you've got to keep in mind. Big chip shortages, supply constraints, a lot of pressure on that industry over the last couple of months. I was reading an article saying that a lot of the prices for retail in those industries, in computer parts, custom computers, gaming computers, all of the products that they sell were up 150, 200% in some instances. So what I think is happening is I think there's a lot of people like myself that is looking to buy a gaming computer or build a gaming computer that decided to just hold off and let those prices come back down to normal. So you would think higher prices make them, more revenue. But there was a shortage, so they had less. They couldn't get their hands on reasonable priced, GPUs, which is going to hurt their gross margins, which is going to hurt their sales. It's going to hurt a lot of aspects of their business. I do think that those are areas that are going to wean and kind of, mellow out and flatten out, especially supply constraints and the chip shortage. I see it as a short-term issue that will come back to normal and they will do just fine. Now, as far as revenue goes, you can see that they posted 391 million, which again was negative 14% year over year. So they actually had a better year in COVID, which is pretty obvious because everybody was home, on lockdown. They were buying, a lot more consoles, a lot more different, streaming materials and things like that. There wasn't those supply constraints. So it doesn't really bother me that they were down 14% year over year. Now, if we do see that again in 2022, then that's an issue that we're going to have to, address when that time comes. But I don't think that's going to happen. If you look below at the guidance, they actually are posting really nice guidance, and they are pretty confident they're going to finish the year out really strong. Guys, we're getting into the holiday season. This is when gaming consoles, PC components, things like that start to get really bought up. These are the big times of year for those types of products, so I think they're going to do just fine. Now, with that being said, you can take a look at the adjusted EBITDA. They only did about 27.6 million, which was an absolute beatdown, negative 56% year over year. So they literally lost more than half in adjusted EBITDA from Q3 of 2021 to Q3 of 2020. That's a big beatdown, guys. Is it something that's going to make or break them? Not necessarily. I don't think it's that big of an issue. Take a look at the full year 2021 guidance. As far as net revenue, they're expecting it to be in range of about 1.825 to 1.925 billion, where consensus was anywhere, 1.88 billion. So right around there. That is on the, I would say middle end. So as long as they can beat that consensus, I think Q4 numbers will come out and they will do very well. People will be glad to see that. Corsair did trade to the upside when these earnings came out. So the market didn't reject them. They weren't, upset. They weren't scared. You didn't see it dump like we did on the last earnings report. Q2 earnings, this thing got annihilated on when it comes to, share price. So I was glad to see that they missed, but although they missed, people were still positive and still think that they're going to do very well. Couple of things, guys. They came out with 3 new products. So they came out with the new Elgato Facecam webcam, which is getting them into a whole new industry, whole new market. They came out with the new gaming monitor, which is also putting them into a 4 billion total addressable market. And then they came out with the Scuff Gaming, Xbox Elite controller for the new series of Xbox. Really cool controller. Again, that's all in their investor presentation that you can go check out. One thing I want to point out. In Q3, despite the bad numbers, Corsair still grew in almost every single category when it comes to market share. They grew their market share in almost every category despite the constraints, the shortages, the lack of revenue. They still were taking market share, and that's exactly what we want to see. I do see Corsair being kind of like the Nike of the streaming equipment. That's kind of the market they're going after with the partnership with Elgato. The Scuff Gaming. We've talked about this in other videos. If you do want to see other videos where I go much further in depth on the products and the company, I will link that right above here, so you can go check that out. Now, guys, I want to jump in, kind of take a look at the charts for all 3 of the next companies, Corsair, Turtle Beach, and Sony. Before I do that, though, I do want to say video game sales have grown for the 5th straight month in a row. You guys know that video gaming is one of my favorite industries, so it's really nice to see that. I don't see these companies being in any trouble. I think they're going to continue to do well and finish the year out strong. First chart we're going to take a look at is Corsair. Alrighty, now this is a chart we have looked at in other videos, but like I said, towards the beginning of this video, the stock has not been doing very well when it comes to actual share price. It's been trading to the downside a majority of the year. If you go back here and you take a look, even as clear back as January, February, the price has done nothing but been on a downtrend since then. If you were to even take a, basic supply line and even pull it down past the wicks, you're way off your supply line. You're way above your 200-day moving averages both pointing down. You're coming up to actually start testing your 50-day moving average that's acted as a steel wall of resistance since clear back here ever since it fell below it in February. So the price action has not been pretty for this thing. We broke a pretty major level that I wanted to see us stay above. We were kind of just, hugging that area, retesting it multiple different times. But once we broke that area, guys, we fell down to the next major level. That's what happens with assets when they break critical support, when they break critical resistance, they move to either side. If they break resistance, they move to the upside. If they break, support, they usually fall to the downside. So now that we've kind of came down back to these original levels that were, initially support clear back in like October when the stock, right after it had IPO'd and it had been out for a couple of months, we had actually started to kind of find a bottom. Now, as you can see here, we had the first bottom that was back here in August. And then second, we tried to test it again back in October, tried to catch a bounce, got rejected at the 50-day moving average and pushed right back down, had a gap. And now we're sitting here just trying to hold on for dear life. Guys, Corsair is not looking good right now. For a short-term trade, if you are looking to, trade it over the course of a couple of weeks, this is not the stock to trade. You move on, trade something else, because who knows where it could go from here. Yeah, these may be lower risk areas, but if you break this area of 23.94, you're probably falling to 18 bucks. You break 18, you're probably falling to $14. This thing has literally had to do almost a full reset, give up, 80% of its value if we take our fib extensions from the low to the high. We haven't even made it to a 78% retracement, and those are the deep levels that you typically want to buy stocks in. When stocks do a full reset, they usually return back to an 88% retrace, which is clear down here, confluent with that $18.60 level. So that's really where it could be going, guys. Do I think it's going to get there? I have no idea, because it could break this level and run straight there, or it could hold, pivot, and start running back up towards the upside. Who knows? But there's no strategic entry at this point saying, yes, it's going to go one way or the other. Now, there is some divergence, bullish divergence on the daily, which does imply a reversal could be coming. But bullish divergence in a bearish trend usually underperforms, just like bearish divergence in a bullish trend usually underperforms. So I think that I would rather see the asset get down to that 786, which is also confluent with that initial high. It's right at that gap. That gap has never been filled. So, I think that's where it absolutely could be going. We're just going to have to wait and see. Again, you tried to have a really nice day today. You ran up, you got rejected that 50-day moving average and got pushed right back down. So I just don't see Corsair really as a short-term trade opportunity right now. However, if you are holding it for the long term and you're dollar cost averaging into it, these are not bad levels at all. I mean, down there at that $25 mark is not a bad price. Again, if it continues to fall, I will just keep adding from here. If it turns and starts running back up to the upside, I will just continue to add from here. One thing I will point out that I thought was pretty interesting that actually could set up a decent trade opportunity. We could be doing something like this, making a M formation, kind of like a Gartley, but again, we haven't made it down there yet. You would need to drop down to, $22 in order to hit that 786 pattern completion zone. As of right now, you are currently sitting, at like 7.4. You typically want to give, at least a 30%, 3% either way, excuse me. So if it's supposed to go to the 786, you can technically let it get to about the 7.5. However, I want it to get to at least the 786 and then give it 3% on. I don't like to give it 3% short because, typically, again, assets make those full retracements. So again, you could pivot here and run, but you could not, and you could continue to fall. So with that being said, if you are dollar cost averaging, not a bad area. If you're not, hold off. Wait until you get a strategic entry. If you get a confirmed bottom here, you start to pivot, you get up above your 50-day moving average, you start building positive momentum. That's a different story. As you can see here on the daily, you are starting to build positive momentum for the first time really since clear back in September. So that could be a good sign. The last two sessions of negative momentum were rather weak. They weren't definitely, big powerhouse negative momentum sessions where it pushed the stock down multiples of percent. So that is a good sign. You could see the tide start to change from here. I do think that these are lower risk areas and you do have more upside than downside. at these current levels. However, again, it could fall further. So, all right, next chart we're going to take a look at is Sony. Guys, this is actually a really nice looking chart. I sent this out in the Patreon down here at about $102 back in like, I don't remember, March or May or something like that. As you guys can see, it had the really nice rally, came straight up to the all-time high after the COVID crash. Not all-time high, excuse me. All-time high since 2000, the tech bubble, but came up, hit that, high point, $118 before dumping down to back test that, 93 to 91 inflection zone. That also goes back historically all the way to 2000. Guys, we had a beautiful bullish butterfly. We had the reaction low, the second low, which was the confirmation low. Notice how you also had a higher low on that second low. So you tested the bottom of the zone, back tested the top of the zone, which then ushered in the bullish shark pattern. So a little bit of a smaller harmonic, but nonetheless still a harmonic. Now, like we've talked about in other videos, we typically want to see those harmonics in the context of a big run up and then an 80% retracement where the stock then finds a bottom, creates a first bottom, a second bottom, and then has a reaction low and a confirmation low after the harmonic pattern. However, you still get these harmonics in the context of a continuation on a pullback after a rally. That is totally fine. I trade those all the time. As you can see off of the bullish shark pattern, we had a nice reaction, which ran back up to test that 118 level before getting rejected, coming all the way back, testing that 200-day moving average before running straight back up, breaking through that level really nicely and having beautiful follow-through price action, hitting the highest prices as Sony has seen since literally 2000 tech bubble. Sony is showing an unbelievable amount of strength right now, guys. One thing I want to point out, some people may talk about gaps and how gaps fill. This is a chart that I don't think you have to worry about gaps filling too much. This thing gaps around all the time just because the nature of the stock. So wouldn't worry about that. But guys, this is a specimen of a chart, especially when you start looking at the weekly and you come all the way back to the tech bubble and you start looking at the levels. Guys, these critical inflection points are no joke. They are so real. Look at this right here. The initial all-time high, the back test, the fall down, the back test, the run back up. The levels correlate, guys, and you've got to watch out for those. But as you can see here, see after the big drawdown, the run up, it got rejected here around that 115, 116 level. We are now above that. We are now breaking a initial wick high and gap low from clear back at the tech bubble. This thing could go into price discovery and see 140 would be the next price target from here. After that, you break 140, 157 from there. Do I think Sony could see 140, 157 over the course of the next couple of months? Absolutely. I actually think 140 by the end of the year is something that Sony really could see. Now, is it going to? I have no idea. These are not the areas you want to buy, Sony, guys. This is something that you're at way high risk areas here. You just broke into, local all-time highs. You could come back to back test that area and blow right past it and start retesting lower levels. However, you could back test it and keep moving right to 140. So Sony is a high conviction play for me. It's something I plan on holding for the long term. So I've been dollar cost averaging into this stock for a very long time. So I have no problem continuing to buy it week in and week out. So with that being said, guys, Sony looks awesome right now. Next target 140, after that 157. But let's jump over and take a look at Turtle Beach. Oh, before we do that, I do want to mention something, guys. Take a look at this hidden bullish divergence after the bullish shark pattern. You had the run up, the pullback, and then you had clear hidden bullish divergence on the daily on the MACD and had beautiful follow through after that. When you get hidden bullish divergence like that, guys, and it plays out, it is so textbook, and that's exactly what you want to see after a run up and a pullback after a harmonic. So beautiful stuff. Now let's move over to Turtle Beach. Guys, this was looking really good as well. Turtle Beach has some massive upside in the coming months if it can break through its inflection point. This is a beautiful looking chart, guys. So I actually sent Turtle Beach out on this, inverse head and shoulders before it tested the neckline and got rejected. Because as you guys can see here, we ran up to test that 3870 level, which was also the highest prices since clear back, I think in like 2018 or 2014, 2012, historic, clear back in historic levels. As you can see though, We had the 35 level, then tested the 38 level before getting rejected. However, though, it did come down to find support at the 200-day moving average, which was the first time that it had touched the 200-day moving average since the COVID crash. Guys, that is an insane rally that Turtle Beach had been on. You could have bought Turtle Beach during the COVID crash for like $3. Then it ran to that high of 38 before getting rejected, and then forming this momentum shifting structure and painting and potential inverse head and shoulders. Now, it started to break the neckline before getting rejected and dumping back down, and we have not had, I want to point this out, we have not had a candle close lower than the left shoulder. So technically, the pattern is still in play. You can get those complex inverse head and shoulders with two shoulders or, two shoulders on one side, three on the next. That's not an issue. You've got one head, you've got a left shoulder. You absolutely could paint a second shoulder here, run up, break the neckline, and hit the price target up there at 37.29, just like that, and it wouldn't be weird at all. One thing I want to point out, you had bullish divergence going in. No hidden bullish divergence coming out, but you absolutely could say you run up right here. You could paint positive momentum. You could run up. You could go to back test the neckline, forming negative momentum and creating hidden bullish divergence coming out of the structure, which would be impending a continuation to the upside. Like we've talked about, you always want to see hidden bullish divergence coming out of those momentum shifting structures like inverse head and shoulders, three rising valleys, things like that. Guys, this is a really nice looking chart right here. Anything above that 2647 level, you got to be bullish. Anything below it, I want nothing to do with it. As you can see here, if we look historically, you can see why those levels matter. That initial high from clear back here in 2011 after the big rally, as soon as it broke that level, guys, look what it did. Ran clear up to $47 before coming all the way back. First wick down, first wick. Couldn't hold on the back test, broke it, but then had a spring and rallied clear past it to an all-time high of clear up there at like $90. Guys, I want you to see how much upside Turtle Beach has if it breaks $38.70. You can see here, this is where it initially got rejected, came back, found support at that $32.36 level, which was a candle high close from here, wick lows, and on the daily, you have a lot more, highs and wick lows and candle high closes within that area. This is a weekly chart, but as you can see, you break that 38.70, $47 after that, you break 47, 64 after that, you break 64.81, and eventually $90. I think Turtle Beach can absolutely do that. It's not going to happen overnight, though. That could take months and months and months, if not years. However, I really like what it's doing right now. It found support at that major level. It's getting that momentum shifting structure. It's painting, starting to build positive momentum. Your RSI is about 48, running up to the bullish control zone. I think you could absolutely see Turtle Beach get above these levels by the end of the year. However, I do think you will at least test it, but if you get rejected, you will probably see much lower prices. If you break this level, the next level from there is 19, 1790, 1913, that area there. So you don't want to break those levels. All three of these stocks I buy into on a weekly basis. Turtle Beach is really the only one that is set up for a short-term trade. If it breaks the neckline, then you could see that short-term target up there to the 35.90 or 37.29, which is the measured move of the structure. Other than that, if you want a dollar cost average into it, I don't mind these prices right here at all, as long as you are holding it for the long term. So that's it for today, guys. Thank you so much for watching. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon if you want to be part of an amazing family. Let me know down in the comments what you think about my analysis, and come follow me on Instagram and Twitter. I would really appreciate it. I'll see you guys in the next one. Peace.